Ever wondered how to get a $50,000 personal loan fast? Well, wonder no more. Today, we'll dive deep into this topic, breaking down the process into manageable steps. By the end of this video, you'll have a clear roadmap to navigate your way to a swift loan approval. From understanding personal loans to checking your credit score and researching lenders, we've got you covered. Stick around if you want to understand the key steps to securing a $50,000 personal loan quickly. Before we delve into the process, it's crucial to understand what a personal loan is. So, what exactly is a personal loan? Picture this. You have a big expense coming up, maybe a wedding, a home renovation, or even a much-needed vacation, but your savings aren't quite there yet. A personal loan is a type of unsecured loan that can help you cover these large expenses. Unsecured, meaning you don't have to put up any collateral like your home or car to get the loan. Personal loans are usually fixed-rate loans. This means that the interest rate and monthly payments are set from the start and won't change over the life of the loan. They offer a predictable repayment schedule, which can be anywhere from 1 to 7 years, depending on the terms you and your lender agree on. Now you might be wondering, what can you use a personal loan for? The answer is pretty much anything. Unlike auto loans or mortgages, which have to be used for specific purposes, personal loans offer flexibility. You can use them for debt consolidation, paying off high-interest credit cards, medical bills, or even for starting a small business. The key features of a personal loan, let's break it down. 1, they're unsecured, which means you don't risk losing your assets if you default. 2, they have fixed interest rates and monthly payments, so you know exactly what you're signing up for. 3, they offer flexible repayment terms, which can be tailored to your financial situation. And 4, they can be used for a wide range of purposes, giving you the freedom to use the funds as you see fit. However, it's important to remember that while personal loans can be a helpful tool, they're not a solution to long-term financial problems. They should be used responsibly, with a clear understanding of the repayment terms and the commitment you're making. Now that you have a basic understanding of personal loans, let's dive into the process of securing one. The first step in securing a loan is to check your credit score. Now you might wonder, why is this so important? Well, your credit score is essentially your financial report card. It tells lenders how responsible you are when it comes to managing your debts. It's like a trust meter. The higher the score, the more likely lenders are to trust you with their money. And with more trust comes better loan terms. We're talking lower interest rates, higher loan amounts, and more flexible repayment schedules. So, how do you check your credit score? It's simpler than you might think. Many financial institutions offer this service for free. You can also use online platforms that provide instant access to your credit report. But remember, it's not just about knowing your score. It's about understanding what it means and how you can improve it. This understanding is what sets the stage for a successful loan application. Remember, a good credit score can be the key to unlocking better loan terms. Next, it's time to find the right lender for your needs. This is a crucial step in securing that $50,000 personal loan you're aiming for. But how do you go about it? Well, start by doing your homework. There are countless lenders out there, from traditional banks and credit unions to online lenders and peer-to-peer platforms. Each has its own set of pros and cons. Traditional banks, for instance, might offer higher loan amounts and longer repayment periods, but they could also have stricter eligibility requirements. Online lenders, on the other hand, might provide more flexibility and faster approval times, but they could come with higher interest rates. So, what should you be looking for in a lender? First and foremost, consider the lender's reputation. Check out reviews and ratings online, or even ask for recommendations from friends or family. You want to feel confident that your lender is reliable and trustworthy. Next, look at the terms of the loan. This includes the interest rate, the length of the loan, the monthly payment, and any fees associated with the loan. You should also check if the interest rate is fixed or variable. A fixed rate means your interest rate and monthly payments will stay the same over the life of the loan. A variable rate, on the other hand, could change over time, which could affect your monthly payments. Moreover, watch out for any additional features or benefits that may make a lender stand out. This could be anything from flexible payment options to customer service availability. Finally, remember to compare. Don't just settle for the first lender you come across. Take the time to compare different lenders, their loan terms, and their overall offerings. This might take a bit of time, but it can save you thousands of dollars in the long run. Finding the right lender is crucial and can greatly impact your loan terms and interest rates. So take your time, do your research, and make an informed decision. Your wallet will thank you. Once you've chosen a lender, it's time to apply. This is where things start to get real. The loan application process may seem complex, but don't worry, we're going to break it down into manageable steps. The first thing you should prepare is your personal information. This typically includes your social security number, date of birth, and contact information, so make sure you have all these details at your fingertips. Next up is employment and income information. Lenders want to ensure you have a steady income to repay the loan. Be ready with your employment history, income details, and possibly even your employer's contact information. If you're self-employed or have other sources of income, you'll need to provide documentation to prove this. In some cases, you might also need to provide information about your monthly expenses, like rent or mortgage payments, utilities, and any existing debts. This helps lenders understand your financial situation better and assess your ability to repay the loan. One key tip here is to ensure all your information is accurate and up to date. Any discrepancies could cause delays or even result in your application being rejected. So take your time and double-check everything before you hit that submit button. Once you've gathered all your information, it's time to fill out the application form. This can usually be done online, though some lenders might have physical forms. The application form will ask for all the details we've discussed, and possibly a few more depending on the lender. When you've completed the application form, it's time to submit it along with any required documents. This might include pay stubs, tax returns, or bank statements. Remember, each lender might have different requirements, so be sure to check what's needed before you start the application process. After submission, your application will go through an approval process. This might take a few days or even a few weeks, so be patient. If the lender needs additional information, they'll contact you. Here's a pro tip. Be proactive. Follow up with the lender after a few days to check on the status of your application. This not only shows your keen interest, but also helps address any potential issues promptly. Applying for a loan can seem daunting, but with organization and preparation, it can be a smooth process. Remember, the key is to be thorough, accurate, and patient. With these tips in mind, you're well on your way to securing that $50,000 personal loan. Happy applying! So, those are the key steps to securing a $50,000 personal loan quickly. Now, let's briefly recap what we've discussed today. First off, we delved into understanding personal loans. We learned that personal loans are a form of credit that can help you make a big purchase or consolidate high-interest debts. They're quite versatile and can be used for a variety of purposes, from funding a wedding to consolidating debt. Next, we explored the importance of checking your credit score. Your credit score is like a financial report card, and lenders use it to decide if they should lend to you or not. The higher your score, the better your chances of securing a loan. We also discussed how you can improve your credit score if it's not up to par. Then we moved on to researching lenders. As we mentioned, it's essential to shop around and compare different lenders to find the one that best suits your needs. Look for lenders who offer competitive interest rates, flexible repayment terms, and have a good reputation. Finally, we walked you through the application process. We highlighted how to prepare your documents, fill out the application form correctly, and what to expect during the verification phase. Remember, being well prepared and organized can significantly speed up the process. The journey to securing a $50,000 personal loan may seem daunting, but with the right knowledge and preparation, it doesn't have to be. Remember, understanding personal loans, checking your credit score, researching lenders, and being well prepared for the application process are the keys to securing your loan quickly.